Hello everyone and welcome to today's Forex webinar. Thank you so much for taking the time out to come and join myself and David for this session, and we'll have a look at what's been going on in the Forex market. But before we start, as usual, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a risky business, so please don't ever think of using money that you cannot afford to lose. I've had a quick look down the list and I can see we've got some of our quantum users. We've got some of our Forex students, but I know we've also got some new people, names that I don't recognize. If it's your first time, just put a little thing into the chat box and we'll give you a little wave, as it were. So in whatever category you belong, you're all very welcome today. And for the benefit of those who are coming along for the first time, as you can, what we're going to do is obviously looking at the Forex market, looking at some trades, looking at the wider market as well, and also looking at charts. The charts we look at through the perspective of volume price analysis. That's the volume and price action relationship, but it's a little bit more than that, and I'll explain in a second. And as I said earlier, we also look at related markets because the Forex market is intimately connected. In fact, all the markets are intimately connected to each other, but it's very intimately connected with what is going on in terms of the other three capital markets, because what the Forex market also can represent is sentiment in the sense that is it risk on or risk off. So which is why we look at what's going on in equities, what's going on in bonds, and what's going on in commodities. Individual currencies, such as the Canadian, such as the Norwegian krona, they are linked to the oil market. You've got the Aussie, which is linked to commodities, hard commodities, the New Zealand soft commodities, and they also have a very close relationship with what's happening in China, because that is where their biggest market is. So you can see there's this sort of swirl of relationships, and what the Forex market does, it actually unpicks everything, because we can pick up the sentiment by simply looking at the flow into the individual currencies and currency pairs, and at the same time it helps to give us a trade. So yes, we look at the charts, but we have to have a pretty good idea of what is going on in the broader markets. Now, and of course, we look at the fundamental releases, of which today we've had a whole raft for the UK. And later on, we've got the very important inflation figures for the US. We've got the CPI coming later. Now, everything I've explained is actually you can read in the books that are on Amazon. This is the digital box set of the books, which is basically an explanation of VPA, worked examples, what we call the 3D approach to trading, which is looking at the technical, the fundamental, and the related markets. And we do have traders who have bought these books, and it truly has, their life has changed. And it's always a great pleasure to hear from these traders, either on Twitter, Facebook, or they email directly. So the methodology does work, and this is the methodology, and it's your foundation. And on top of that, you then develop as whatever trader you want to be. Do you want to be a day trader? Do you want to be a scalping trader? Do you want to be a medium-term trader? Do you want to be a long-term trader? That is, once you have this fundamental methodology, once you've got to grips with it, you can then build on that, and then you build on you can add your specialist indicators, your standard indicators. As a lot of the indicators, they will work depending on what you're trying to do with the chart. I'll explain a little bit more detail when we look at the chart themselves, and because what volume price analysis helps you to do is recognize. I use the word structure of the chart, but I actually want to use the word shape of the chart. And once you recognize that shape, what it tells you, well, it gives you all sorts of information. And as I said, I will look at it in particular with relation to the pound Aussie. But it also can, as I said, it gives you other information in the sense that what kind of trade are you likely to be able to take from that shape, and is it going to be and what kind of risk there is on that trade? So as I said, much better to see it in an example, which we will do in a second. But back to VPA, we've got price action volume. We use candles and candle patterns, and patterns are something we're going to be focusing on a little bit more, not today, but in upcoming sessions. Patterns, it's quite interesting actually. We do, those of you who come along to our stock sessions, of which there isn't one today for various reasons, but there will be one coming up soon. And the difference, if you've not looked at these two different markets, when you read about patterns, and I don't mean one or two candle patterns, I mean actual shape patterns that you see on charts, it's quite interesting that in some markets, what patterns work best in certain markets, and there are very, very specific. We have noticed with the forex market, there's certain candle combinations, much more so in forex than say in stocks. And the last element of VPA is of course support and resistance, and we use price-based support and resistance and volume-based support and resistance, and the two together are absolutely phenomenal. And I've got you'll see them on my chart, and I know David, I think David's been quite surprised with the volume SNR this week, haven't you? Yes, he's been saying, why is it this works? It just works. So anyway, I'll get him to explain that to you. What we've done for forex, we've actually developed specific indicators. I said earlier, this is about flow. All the markets about money flow, of course, but in the forex market, it's about the flow into individual currencies and individual currency pairs to tell us where the flow is at the moment. Is it, and is that going to continue? Obviously, are we going to join in an existing trend, as it were, an existing move with that? Are we going to go with that flow as it is at the moment, or are we going to wait for when that wave of money sort of dies down, the flow comes to an end, and we will get a reversal? Because obviously you're trading one currency against another. And what these indicators do is they, first of all, they highlight the flows, and then they also highlight the pairs where that money is going to. The forex market is, it's almost David and I have been discussing this, it's almost the perfect trading market in terms of I won't say it is a mean reverting market. It means that, you know, it oscillates, it goes up and down, it goes in waves, as it were. Much more so than say stock markets. Stocks, no one buys a stock because it's going to go down. There's no bias in this market to either the long or the short side. It is what it is. Money will be going into the pound for all sorts of different reasons. Money will be going into the dollar for all sorts of different reasons. There may be trends, there may be seasonality, but essentially I think it is a perfect trading market in the sense that, you know, once you recognize the shape of the chart, whether you think you're likely to, you know, get a trade either from a breakaway or a reversal, you can play this market in both directions equally. That's what I'm trying to say. With stocks, well, the way the markets are at the moment, it's sort of one-way traffic north at the moment. I know it's had a bit of a sharp correction yesterday. You know, markets generally at the moment, they're quite conflicted, they're quite febrile. Especially with sentiment and stock markets, things have been going up so much, certainly you know, since March last year when we had the sell-off because of the virus. It's been very strong. I mean, to give you an example of you know, the kind of tide that is in the equity market, if you I've got some figures. The S&P 500, 92% of the share of the companies that make up the S&P 500, 92%, they are trading above their 200-day moving averages. Now, whatever you think about the 200-day moving average, it is a metric that is used to determine what is called breadth. Breadth is, it's to see, it looks inside a market and see, well, you know, where is it, how is it positioned? Is it much broader to the long side or to the short side? 92% of individual companies are above their 200 MAs. It's not unprecedented, but you know, you can look at it from two perspectives. Bulls will be saying, great, you know, onwards and upwards if you are you know, a bear, you would say, are we coming to a selling climax maybe? The shape of the chart will tell us and volume will confirm it. But that is to give you an example. So if you're a day trader, as an index trader, yes, yesterday was fantastic because finally, you know, you got some decent shorts, you know, moves to the short side. But generally, if you look back at the chart, it's kind of been one-way traffic, and that's been up. And that's, you know, and traders get very unnerved and they think they don't want to be seen to be chasing that price. But you've got to see what the chart says and set aside what you think should happen to what is actually happening. So that's my little homily about the related markets. Just something to bear in mind. Now, you might be asking yourself, well, how is that going to be reflected in the currencies? Well, very simply, as I said, individual currencies, as well as being a proxy for, they are a proxy for sentiment. They're not just a proxy for commodities. They are commodity currencies, because when there's a demand for commodities, say from Australia, whoever's buying those commodities has to buy the Australian dollar. So the Australian dollar will, you know, will rise. It'll be more expensive, but they're also a proxy for that, for sentiment. And the currencies to watch are the Australian dollar, the New Zealand dollar, the Canadian, but you also look at the Japanese yen and to some extent the US dollar as well. But the Japanese yen is one of these currencies where it looks both ways. It can be both a currency for risk on and a currency for risk off. And one of the ways we can determine whether the market is fully behind a risk-off sentiment or a risk-on sentiment is to see the buying or selling in the Swiss franc, the Japanese yen, and the dollar. So if you see all those three currencies pretty much being bought outright very, very strongly, you know the market is really not in a very good place. It's not in a happy place. If you see them being sold off very, very strongly, you know the market is feeling very, very bullish. Now, what's been happening is, if you've been looking at your CSI that you have here, there's been a bit of divergence. Yesterday was a really good example where we had some buying of the Japanese yen, and we were having a sell of the Swiss franc. Now, as I said, market sold off. We're just in one of these periods where it's all a bit not confusing, it's just a bit unclear. And it's partly because everything is so overextended, particularly in the equity markets. It's kind of reflecting the somewhat conflicted behavior that you are seeing in the equity market. I mean, generally the rule of thumb is, well, if it sells off, buy the dip. If it sells off, buy the dip. And it's proved to be very, very profitable from an investing and a trading perspective on the equity market. But, you know, there's always undercurrents. And in some ways, the forex market is a much more accurate barometer of what is going on. And if you see these mixed signals in the market, you know there is this conflict about sentiment. You know, everything is, you know, probably overextended, as we can see here, but at some point it will all lock back into step, as it were. Now, how does that translate into, you know, what are you going to trade? Well, those of you who come along regularly and read my stuff on Facebook will know I pretty much focus on the British pound, and the British pound, certainly from Monday, has been in, you know, it's just delivered some fantastic trades. In fact, one of our students put up in the VPA room, he did triple digit pips on Monday. He was so thrilled with it, and we were thrilled for him. The pound yen was a stonking move, and I think cable was as well, Dave, wasn't it? Yeah. But what has happened when we look at, this is the hourly CSI, the currency strength indicator, and the matrix here. The matrix takes this data and ranks all the pairs. Now, obviously, this is what is going on at the moment on the hourly chart. What happens is when currencies, they can be very, very let's call them overextended, because they can be down here as well. And what you then have, what I call a technical reversal, because of what you see on the chart, but it is not a major reversal in sentiment. And this is what has been punctuated with the British pound. You had this, it just stuck up here, reversed, come back up, reversed, and each one of these little moves may have offered an opportunity to go to the short side, but it really wasn't until here, this point here, which was I think it was overnight, where it actually delivered much more of a potential move in one of the pairs. And this is also, I've had a look at my the pairs that I like to look at, which is the pound yen, cable, and I've got pound Aussie. Now, while cable and pound yen were absolutely flying on Monday and Tuesday, pound Aussie was, it's been stuck at in a consolidation pattern, consolidation shape on the daily chart. But I'm hoping that, given the amount of volume that has been going in on the daily chart in this congestion phase, and and it's a fantastic example of Wyckoff's second law, I'm going to have to be a little bit patient. And that's what you have to do when you like to trade maybe like a particular currency, because it suits your your time zone. And British pound obviously suits us very, very well. And you restrict yourselves to maybe one or two pairs, then you're going to have to wave goodbye to what is going on in the other pairs. And sometimes when something, your pairs may not be doing very much that particular day, it can seem very frustrating. But I would suggest, the reason for sticking to something, one or two pairs, one or two currencies, is because, and just see if I can find, here we are, is because what you also need to get to know about your currency and currency pairs, you really need to understand how they behave, in particular before major releases. Now, this morning we've had a whole cluster of releases for the British pound, and what I've brought up here, usually most traders go straight to Forex Factory, which is a great site. But as you can see, it kind of cherry picks, it kind of highlights economic releases, which is fine. But for when you're beginning, that's absolutely fine. And it ranks them. It's got its own ranking system as to how much impact they're likely to have on the market. This is what I said earlier. 1:30, we've got the CPI data, and they've got it as in red. But when if you really want, that's great for a quick overview and say, oh right, that's coming up to date. But if you are trading a particular you're focused on a currency or a currency pair, you really need to kind of beef it up a bit. You can either go off to a Financial Juice, which I also use as a news feed as well. So it fulfills two functions, and here you can see it's much more comprehensive. But what we also suggest, and it's something I put up on Twitter and reminded our students as well, is go over to Trading Economics. And what you do is, you can have every single one of these release for every single one of these countries. I don't suggest you do. I suggest you, in some ways, what you need to do is sort of have more than one calendar, and otherwise, because they will give you every single piece of data that you possibly you will never need. But that's the function of this site. So what happens here is I've cut it down. Let me just say that, and what you can see here is the difference in the sheer number of releases for the United Kingdom. They will also highlight which they think is the most important. You get, sorry. Sorry about that. They will highlight the ones in the dark color with the time. So that was the British pound, and of course you've got here for the USA. But look at the rest for the USA, and goes on and on and on. It's a lot to take in at the beginning, but the key to this is what you will know in advance. Hopefully you will look at the beginning of the week and you will put in your diary, say these things are coming up. When you start, what you must try and get a handle on is, first of all, which of these releases the market thinks are important. What the calendars think are important is one issue. It's what the market thinks is important, and you will pick that up from the narrative in the media. At the moment, it's all about inflation. So anything to do with inflation is, market is going to pay more attention to. So that's the first thing. Second thing is you need to watch what the currency is doing, particularly the day before. And it's quite interesting because the important releases, say before a central bank, you will find sometimes the currency being either heavily bought or heavily sold. Now it could be part of, it could just be coincidence that the banks have got to buy the currency at that particular time, or it could be that maybe something is going to happen in the release and they are either positioning themselves ahead or they're taking in currency or offloading currency. We never really know. But look at the price behavior before certain releases, and then because releases come every month or every other month, some are not every month, you will kind of get a feel for it. It's kind of getting to know your currency and currency pair. So when you are trading and you want to take a trade, you're not going to get a shock when volatility suddenly comes in. Now, I said earlier about the pound. The pound has been very heavily bought, as we've seen. I'll just quickly just show you on the pound yen. Where are we? And it was actually, in fact, the pound yen on the day. This was Monday. This was a really nice break from the volume point of control here. The volume point of control is one of the indicators that we've developed, which is a hybrid. It's a combination of what's known as market profile. So this can be viewed as what's called the value area, in the sense that traders are happy to transact within a very sort of narrow range, as it were. And pound yen until Monday really hadn't done very much. It'd gone up, down, up, and then done not very much. So if you were trading this on a faster time frame, you would have thought, oh my goodness, it would have been. When you see a daily chart in this kind of configuration, this kind of shape, and you're on the faster time frames, the chances are you're going to get some very choppy price action. You're possibly going to be able to take some pips, but you're going to have to use the faster time frames, or even time frames that are not time-based, either a Renko or a tick chart, and David has got some of those as well. So trading around the volume point of control on the daily gives us an indication of what to expect in the faster time frame. But what the VPOC also does is, at some point, this is going to go in one direction or the other. Now, the longer that it is in this congested phase, not moving in, there's no divergence, the longer it is, then you get Wyckoff's second law stepping in, then the more explosive the further it will go once the break occurs. Now, what is also interesting is look at the volume that is piling in at the congestion phase. You will see sometimes these masses of amount and nothing is happening. Now that is obviously anomalous, because effort, there's no result. The effort is going in, but you're not getting an equivalent result. But just bear in mind that is, if you like, it's adding more. It's kind of winding the spring up for the congestion phase, so that when it does happen, if you see masses of, this is something to think of, and the patience thing that I mentioned, because such a lot is going in a congestion phase, you kind of know that when it does move, you are going to get an explosive move. And in fact, we did. This was Monday's move in the pound yen, but the groundwork was laid for it back in the congestion phase that we see here. So congestion phases don't ever be don't be frustrated by them. They can deliver some fantastic trades, but you do have to be patient and look at the volume that is going in. Now, what this indicator also does for us, it gives us what we call our volume resistance by these bands, if you like here, these volume strips, whatever you like to call them. And it also has a lower point and a higher point. Now, where the volume point of control is in the histogram is also gives us a clue of, is this likely to carry on higher, or is this just not going anywhere, or is this perhaps going to be, rolling over? Because this also, the VPOC itself also acts as a support and resistance marker for us. Then you have the usual price-based support and resistance. We have here the slightly thicker lines of stronger. The hatch lines are not so strong. The histogram also gives us another piece of information, is where you get what we call these low volume nodes. You see here there's very little shadowing compared to the shadowing that you see here. As and when the price reaches these areas, it's going to go through very, very quickly. But going back to the pound yen anyway, you can see it's had this fantastic uptrend until it got to the VPOC, and it's kind of been oscillating around it, and now it's had this solid break, and it's encouraging because it's actually gone beyond the most recent high in this broader congestion phase. But really the effort, if you like, for this really is in these two. I think in these two, in this candle here, the amount of volume that really was pumped into that little candle there, clearly anomalous. But because it was in a congestion phase, if that was in a trend, if that had happened in a trend, you could say that is an anomaly. That's not going to go very far. It's going to roll over. Because the shape of this chart is in a congestion, we have to be patient. Now, what happens after, as I said, the spectacular move on Friday, on Monday, a bit of a doji yesterday, not really doing very much. Once the energy is expended, you have to, you just have to wait and be patient. And pound yen is obviously tied to what is happening in the UK, but also it's one of the yen pairs and one of the proxy currencies for risk. So if this afternoon, after the CPI, the American markets decide, that's it, we're off to the races again, then that's where you will see it in this pair. So you have to sort of keep half an eye out on what is happening elsewhere. We normally go over to investing.com to see what is happening in the indices, but if you've got MT4 or MT5, you can set up your own chart. So this is the NQ, just to give us an idea of what the indices are doing. This is yesterday, big sell-off on the NASDAQ. Monday was a big sell-off, then it carried up, but then we had a huge hammer candle. This is what I'm saying, buy the dip. They've certainly bought the dip again, down again slightly. Now it's trying to rally, and I've set myself up for the NQ, the YM, and the ES. Where's the YM? The YM has kind of been doing, that had a bit of a big sell-off. And again, you look at what I'm saying about the shape that you see on charts, and what is the daily chart telling you? Because this market is fractal. Markets are fractal. What you see here, you will see replicated on a faster time frame. You kind of know that market was possibly going to, certainly a pullback. Look at this, a shooting star. Back on Friday's close, not a massive amount of volume underneath it, but it did hit a major volume resistance from the volume point of control. So at the very least, you would expect something to happen, but it was a bit of a runaway train yesterday, and away it goes. But then it also hit an all-time high. So all sorts of factors, maybe lots of profit taking, who knows? So by having these on your platform, you already, gives you an inkling of what is going on. I've got gold, I've got oil. They're not the actual futures, but they are good enough for you to get a really good picture of what is going on. Now, the pair that I'm really interested in at the moment is the pound Aussie. And the pound Aussie, we saw the pound was quite spectacular at the beginning of the week, as we saw, in both the pound yen and cable, put in some fantastic moves. Pound Aussie really didn't do anything. That's Friday's candle. This is Monday's candle, and you think, this is very, again, it's at this, but look at the volume underneath it. The amount of effort that is going into this congestion phase is, I think, is phenomenal at the moment. Now, it has gone up slightly today, but for this to go into some kind of decent trend, then we are going to, this is a patience trade. But it also is an example of how a currency can be bought very heavily or sold very heavily in one or two pairs, but in others it hasn't got that same momentum. And sometimes you get the buying or the selling has to die down over there, and then it swings back over here. But judging what is happening there, this is the move high. This is using the as I said, Renko in particular. When you are in these congestion phases, then it gives you a much smarter entry, because you're working with quite a narrow range. You don't have the luxury of saying, well, I could get in here, I've got a little bit of leeway. When the daily is in a tight congestion, you have to be quite smart about getting in. And what the Renko does, first of all, it gives you this geometrical shape to the chart. You can see the kind of choppiness that we have here simply from the price action of the Renko bricks. We've also got the trend monitor dipping in and out of the different colors. And this is where you have to use it in conjunction with the support and resistance levels. Sometimes you will be, it won't work out because there is too much choppiness. Whether you decide to try and take some pips in this pair, given what we have seen on the daily chart, is up to you. You may think, no, that's really not for me. I'm going to be, I'm stopped out so many times. I'm really going to wait until there is a more the definitive trend. But it can work if you stick to using the support and resistance. You've got the key levels from the Camarilla are the R3 and the R4. And, the rule of thumb is, well, when the trend dot and the trend monitor, once you've got 3 or 4 dots go through, they are, they have the same color. Then, you could say, okay, away I go using the Renko. But you could also say is, well, let's see a significant support and resistance. Let's wait till it breaks through there, and away it goes. And you'll always find at the 3rd and the 4th level, there'll always almost be a pullback. But what Renko does, it helps you to manage the trade in the sense that it helps to keep you in. With regard to coming out, this is where I would say go to the time chart. And what's interesting with the time chart is, first of all, the move that we were looking at on the Renko is really this little bit here. But look before that, can you see all this congestion with the wicks to the bottom of the candles? This is telling you this is really, really choppy and reflecting what's going on the daily. And this was okay. It might have come out in my getting out as soon as you get the volatility candle. Yes, there's momentum gone into it, but boy, oh boy, with that momentum, you get a lot of traders jump in, fear of missing out, and then what tends to happen, the price will almost always reverse into the spread of the candle, and either completely reverse as it has done here, or move sideways. And in fact, we had a really example of a reversal into the spread of that candle and straight back to the volume point of control, which is pretty much what you would expect. But there was a potential there, a little bit of a move there, and this is what we've seen subsequently, just a reversal and chopping sideways. But what I'm really interested about the pound Aussie is really seeing what it does on the daily chart, and possibly waiting for, because when the pound Aussie does trend, it really does trend. Also the range of the candles on the day, these have been very narrow for the pound Aussie. It can, as you can see here, it can deliver some really big moves on a daily basis, and they are, it is possible to catch those moves. So really, I've got nothing, to be honest, I've got nothing more to say, because my moves in the pound have kind of come and gone. The only thing I would say is, if you are, my last thing before I pass to David, going back to the matrix, and I think it's actually moved off the bottom at the moment. Yes, if you're not interested, you're just saying, well, I just want to find something to trade. It's awfully interesting. I just look at the CSI, and And the pair that was really of most interest was the Canadian and the New Zealand. Now, it is a cross pair, and there's obviously, you can be penalised by your broker in the sense that there's a wider spread on the cross pairs, but it's just an example how, as I say, going back to this idea of what the shape of the chart is. Now, what's interesting with the Canadian, the New Zealand CAD is we've had a period of, as you can see here, sort of sideways from this trend lower, this consolidation. This is how charts move. They trend, they move sideways, they then break away, they come back, etc., etc. And this is today's candle. You can see here there's not masses of volume going into these. They're quite wide-ranging candles. So, you know, in a congestion phase, if you've got big candles on the faster time frames, there will be opportunities. But this is the move lower, where it has finally broken lower. And this is the difference that you would get in the Renko. You get much smoother price action, and you know, possibly one to consider. And looking at it on the time chart, what you have is you prior to the move lower, again from this support and resistance, again from the S3, we've actually got the VPOC in there as well. Prior to that, can you see that? Lots of volatility. This is a congestion with volatility. Why? Because we've got the volatility indicator at either side, and knowing that it's at the VPOC, you would stay away from that. You would wait until you have the break, and then you did have the break, and we've had a very nice break lower. Where did this come to an end? As I said to you, looking at the time chart, well, we had a volatility candle and we had a pause at a volume support. So, you know, are we looking at a reversal? The indicators may tell us, or is it just a pullback? You would have to look at the volume on the pullback. If it's falling or it's not consistent with the candles, then that is, you know, that is simply a correction, a secondary trend, and it will come back. But where's it going to come back to? If you're going to go lower on this one, well, it's got to break through this level here. And we look at the hourly chart. Where are we hour? Funnily enough, it's at the S6, which is the last level on the Camarilla. So it's trying to base back from there. When it's on this last level, you move to the levels on the daily levels. And in fact, it's also moved through the S3, S6 on the daily level. So we're out of Camarilla levels for the time being, but they'll be delivered tomorrow. And then we use them for any reversals. Where is this aiming for? Well, it's got the 5th and then the 4th and then back to the 3rd, which actually, if you look at it, precipitated this a nice move lower. Right, any questions, pop them in the chat box. I will then now pass you over to David.
Hi everybody, thanks darling. Good to see you. Good to have you with us. Let's just move the chat out of the way. Well, I've actually got 3 platforms running. I'll try and get around them as quick as I can. I've got Ninja up here, I've got Tradestation down here, and over on the right hand side I've got TradingView running as well. Just thought we'd start with, this is on the, just to get a fix on sentiment, and obviously the things that are going on globally at the moment. I mean, one of the things that's now erupted in the Middle East is obviously the conflict within Israel, which has already caused some nervousness. Yeah. This is on the, I've got the YM, the NQ and the ES along the bottom here, and on the top I've got the 5-minute time frames. I've got the daily down the bottom, that's the Dow, and Nasdaq 100 and the S&P 500 on the bottom, and up at the top there, the equivalent on the 5-minute time horizon. And really, probably of all these, this was the most interesting the other day. When you look at daily charts and you're looking for potentially what is going to be happening intraday, this is on sentiment obviously, but the same applies to whatever chart it is. That was the candle on, when was it, where are we now, Tuesday, Wednesday. This was the candle that really gave you a signal that there was certainly an amount of weakness coming in. That was the reaction the following day. This is what we've had so far, a little wick to the downside. There's a lot of nervousness in terms of sentiment in the market. Big hammer candle on the Nasdaq yesterday, lots of volume coming in there. Just pop that up full size, make it easy to see. That was the amount of buying that came in under there. Huge wick to the underside, lots of volume supporting it. So we know there's a ton of buying coming in there. The question is, you know, this has been quite a dramatic sell-off. So there's going to be more selling coming in. That's got to be mopped up. There is a wick to the lower body here at the moment, but part of that is a reaction, as I say, as the overnight news, and that is ongoing. Depending on how that develops, that will obviously be reflected in terms of global sentiment. Just go on to the charts. Let me just go over here because it's probably easier. There we go. Currency strength multiples. This is on 1, 5, 10, and 15, and it really does demonstrate what's going on at the moment. The CSI is a fantastic tool for identifying those opportunities where you're looking for reversal opportunities, as I do all the time, or whether you're looking for trend opportunities, jumping into an existing trend. But this is what's going on at the moment. It's very messy, and wherever you look, this is on Trading View, this is on what have I got up here? This is on New Zealand dollar. This is the sort of price action we're seeing, very much around the volume point of control. All this messy price action, lots of congestion, and the VPOC is in evidence pretty much all over the place, certainly in terms of the faster time frames at any rate. If I drop down onto the multiple time frames, there we go. This is on, what have we got here? Aussie yen. You can see what's going on. This is on 15 second. This is on a minute. This is on 3 minute. This is on 5 minute. The VPOC they're all trading around that VPOC range. So it's just a question of having to be patient, having to wait for the price action to break through a particular level. Are you looking at a price-based level such as these on the accumulation distribution indicator? Are you looking at volume as it falls away on the volume point of control histogram? Where are the levels that you think, okay, well, I've got to be patient, I've got to wait for this market to break. The converse of that, if you like, is if you are, and this doesn't suit everybody, this is the 15-second chart, and I've said this many times before, but if you're an out-and-out scalping trader, you can only apply this sort of time frame to very tight pairs. You cannot work this on anything that's got 3, 4, 5 pip spread. So cross-currency pairs are out. You're really looking at euro dollar, the majors. If you're going to trade intraday on these sorts of time frames, you've got to have tight spreads because you won't win otherwise. But if you have to trade when market's in a congestion, then it really is a case of stepping down to the much faster time frames, but it doesn't suit everybody. I use this a lot, but I use it in a different way because of what I'm looking at here is basically what is going on in 15 seconds. How does that translate into what is going on into the minute and the minute through to the 3 minute and so on and so forth. But this is pretty much the picture. You can see it over here. This is on 10-minute time frame. It's very congested. Lots of intertwining, currencies moving sideways. There isn't going to be any strong trend in any of those pairs on this particular time horizon for the time being. And that's the beauty of the CSI. We all talk about looking at it for opportunities. It's great for identifying overbought and oversold and looking for reversals and so on and so forth. But it also tells you when to stay out. When you've got this sort of configuration, then you've just got to wait and be patient. If you're trading intraday, you've got to wait and be patient. If you're trading longer term, it's of no consequence because you're looking at this from a much longer term perspective. You're not interested in what's going on in the 1 minute, 3 minute, 5 minute, or indeed any other time frame. You're out on the dailies and the weeklies, probably from about the 4 hour upwards. And speaking of that, let me just pull this over. This is on, actually, let me just show you something else. Sorry, let me just to make the point on Tradestation. This is on Tradestation. This is on the currency futures now. So this is the 6A, this is the Aussie dollar, this is the 6B, which is cable, pound dollar. This is the 6C, which is the inverse. This is CAD dollar, not dollar CAD, because everything in currency futures world is inverted towards the dollar. So everything is priced against the US dollar. So this is CAD dollar, this is euro dollar 6E, and this is New Zealand dollar. And I've got the Swiss dollar over here as well. But if you can see from just the colors on the trend monitor, which run on radar screen, which is such a powerful way of flicking through charts very quickly. I can click on any of these. This is over here. These are all symbol linked here and interval linked. Exactly the same over here. So I click on any of these and it'll automatically pull out. This is the 6A on 5 minute. You can see where it is. It's around the volume point of control. We had a volatility trigger, tons of volume coming in. It's what we expect. It's a trap move. The big operators, market makers are in there. It's trapped, reversed on that occasion. So you either get congestion or reversal. If we go over to the 6B, just click on that, up comes the chart. We can go through very quick. Again, you've got the volume point of control. Drop down onto the 6C. Volume point of control is in evidence. Down onto the 6E. Euro dollar, exactly the same. down onto the New Zealand dollar, volume point of control. So the markets are really, they're not nervous, but they are unsure of direction. There's a lot of congestion going on, a lot of uncertainty, and hence that is reflected in sideways price action. You can see it visually on the trend monitor because it's not a universal color. If the dollar is being sold or bought universally across the matrix in these time horizons from 1 through to 15, then the trend monitor will be pretty much a consistent color across, and it isn't. We've got all these varying sort of colors up and down the chart. I've got the volatility trigger over here as well on radar screen. You can see down here over on, where are we, New Zealand dollar, we've had a volatility trigger come in 2 minutes ago, so we just click on that one, take that over onto the 2 minute, there we go, pop that up. That's where we had a volatility trigger. You know, if you've got a position and you get a volatility trigger, and I've said it so many times, if you're in profit, close out, wait, just be patient for the price action to clear, because you don't want to sit through congestion, and you certainly don't want to sit through a reversal. So running it in this way on radar screen on Tradestation, this is on 9.5, this is running through Tradestation Global, and the data feed is Interactive Broker. So this is linked directly to an Interactive Broker's feed. So if you have an IB account, it's a fantastic way to trade because you can trade straight through the chart and you get all the advantages of Tradestation as well. Let's just pull over Trading View. For those of you on the program, you'll know I posted up some results of the, I haven't got it linked on at the moment, on the trading panel, our little FXCM account. Just pop that up. There we go. I want it full size. We've got the FXCM account. We've got that up to, I closed a whole bunch of trades out on Monday, late Monday morning. And we've now got that up to $1,155, I think $54, something like that. So basically we've put on $300, in other words, 3,000 pips since the start of the year. So it's going nicely. But this is the other end of the spectrum. This is basically trading much slower time frames. So I'm not interested in what is going on the 5, 10, 15 minute. These are positions I put on and hold for days and weeks in some cases and scale in, that sort of type of approach. So it's very much a slower term approach, which just goes to show that, you know, it's not all about scalping. If you don't have the time available to sit on the screen all day long, we do, we're very fortunate. A lot of traders don't have jobs. A lot of our students have full-time work. You know, it just proves the point that you can still trade this business in exactly the same way, the same principles of VPA, same indicators, same everything else, and do it in and be profitable. You're just trading much slower timeframes. The quid pro quo is obviously you have to set much wider stop losses. On this account, I'm only trading micro lots. That's it, nothing else, only micro lots. And so far, as I say, we've managed, when you start, it's about how many pips you take. It's not about the money. So $300 is neither here nor there. 3,000 pips is significant. I'll just run through the indicators. I know a lot of you are waiting for the upgrades on all the indicators which we're porting across to Trading View. These are the ones that we couldn't develop because the Pine script didn't give us the capability. It now has. We've done all the indicators. They're all up and running. We are literally in the final stages of finalizing the support pages. Some of them have already gone up, putting these products in the shop. And if you already have the full package, for Trading View, then you will get all these indicators added automatically. We are going to go through all the accounts over the next week or so and add these indicators that are missing, so you get them all for free. This is the time accurate Renko, which is, I would say, unique. No one else has developed such an indicator. And basically, the problem with when you're running a Renko against a time-based chart, because a Renko chart is independent of time, it's very difficult to actually tie the price action back to the price-based chart itself. And what this does as a time-accurate Renko is it actually ties to the interface, so the two are running in parallel. So the bricks here don't build until they've met the metric of the brick size up or down, and then they will move. So what you get is this very different visual picture of a Renko chart, whereby you get these congestion phases which are actually built in real time in the same way they're building up here on the price chart. And then once a move develops, then you will start to get the more conventional bricks into congestion down again and on up and so on and so forth. It's very unusual. We've had a lot of interest in it, but it is part of the full package. And it is two indicators in one. You have the time accurate Renko here, and you can flip this to the conventional Renko that you would probably recognize and be more familiar with. So it's two indicators in one in terms of the Renko. This is a currency matrix. We've got the all-time high and averages here. These will be ported back onto all the other indicators in due course, but it's only available on TradingView at the present. And basically what this gives you is a sense of this data here as to whether it is high, average, low, where is it? In other words, it gives you a flavor of whether the currency pairs now, rather than on the currency strength indicator, we've got individual currencies. This now gives you a heads up as to where the currency pairs are in their journey in terms of potentially reaching overbought and oversold, because prior to that, these values were just that. They were simply values telling you how far the currency pair was from the median at 0. Now you have this this metric which tells you, this at the moment pretty much average. The all-time high was 7.6. Down at the bottom here, what have we got? So we're way off here in terms of the all-time low of 8.5. And this is looking back over several bars, and the average here is 5.8. So that's in terms of the matrix. Not sure what the next one is. I can't remember now. Okay, this is the currency heat map. Let's pull the other one back. Let's start over here. They do move around on here. Let's click that over there. Come on, where are you? There you are. Right, there we go. Just widen that up a bit. There we go. Put it back. Come on. There we go. Just do those two. In terms of the currency heat map, this is very different to the heat map that you will find on Ninja, on MT45, or on Tradestation, purely because you now have on TradingView the option, as you can see here, to set different time frames. So this is set from 2 minutes through to 30 minutes. This is set from 1 minute through to the week. In other words, you can configure the heat map to your chosen approach to trading, which you cannot do on the other platforms at the moment. We're going to look at if we can obviously do that over there, but we started with it on TradingView. So it means you can have multiples of these. They work in exactly the same way. The principles are very similar, or they're identical, in that when you look at the currency pairs in the ranking here, these are weighted. So the 30-minute time frame will carry the most weight, and the 2-minute time frame will carry the least weight, which is what you would expect, because a change in sentiment on a 2-minute time frame is going to be less significant, less important than a change in sentiment or an increase or decrease in sentiment on a 30-minute time horizon. And that's why on the heat map, these currency pairs in the ranking ladder will move far less slowly than they do on the currency matrix. On the matrix, they are tied to one time frame and will reflect that accordingly, and therefore will move up and down rapidly. If you configure this to slower time frames like this, or you can go even further out as of here, the CAD yen on this sort of time horizon, the week is hugely bullish. Therefore, you wouldn't expect to see the CAD yen move lower until you start to see sentiment shifting to bearish. You've got some bearish in the 4-hour, but not very strong. But if you start to see that migrate through to the daily, that is when you would start to see these pairs start to move. So these are only going to move maybe one slot in a day, or maybe a couple at the most, perhaps. Over here on this faster array, if you like, they will move perhaps 2, 3, 4 slots, because you're dealing with a different time horizon, and so on and so forth. So it's very exciting. It's a completely different way, but it allows you to configure the heat map to your own trading approach to the market. This is the currency array I've got over here, and I've got the currency matrix running there. Over onto the accumulation distribution indicator. This is very similar to NinjaTrader. Support and resistance, basically. This is price-based support and resistance. What does it show you? It shows you graphically the strength of those levels. So this level here has been tested and held 7 times. You can see how strong it is on this particular chart. lots of testing of that level. It's capped it off. It's very strong resistance, and equally you can look at the others in terms of this was a support level that's now become resistance, so that was pretty strong. And basically what it does is it presents these levels. Not only does it give you numerical values for them and tells you how often they've been tested and held, it also delivers that in terms of the thickness of the line. So this is going to be thicker than this one, and you've got these little minor levels down here which have been tested maybe once or twice. That said, when you get clusters of these together, these minor levels, they can build into something a lot stronger as well. So that's basically all the indicators that we've got, which will be coming across very soon. This is the CSI, which is already up and running there anyway. And then you've got the volume point of control here as well, with all the various high volume and low volume nodes on the chart, as you would expect in the normal way. So as I say, they will all be added automatically. If you have the full package, they will be coming across in due course, hopefully, I think within the next week or so. It's going to take us a few days to get around everybody, but that's where we're going with everything there. So this is what's going on in terms of Aussie. Let's just see what's happening in terms of sentiment. See if there's, it's very choppy at the moment. And as I say, this is on the three primary indices trading on Globex at the moment. The cash markets aren't open for another 2-3 hours yet, but it's very, very uncertain, unsure, moving sideways, and really that is reflected across the markets as they stand. Let's just go and have a look at, I've got the tick charts here as well. Tick charts and Renko charts are both non-time based, and again, it's if you're trading on as a scalping trader or an intraday trader, they're a fantastic way to trade because they reveal momentum. The one thing you never see on a time-based chart is you never see true momentum. In other words, the chart never speeds up and slows down. It's not a cog that you see speeding up and slowing down. On these sorts of charts you do. On the bottom here, I've got 3 tick charts. This is set at 34, which has come off here, this value here. This is on the equivalent of a 15-second time horizon. So basically there's a 15-second time chart above, a 34 tick chart below, and that 34 is delivered off here because we're just setting it to the appropriate time horizon. Because the big issue for trading on tick charts is, what do you set it to? What value do I set it to? You have no idea, and that's why we developed the tick speedometer. You can see it's just flicking around there, picked up, went back again. This one is 89, so I've got that set to 89 tick. And this one over here, there's the 1 minute equivalent I've got set to 233 ticks. So in other words, every time 34 ticks go through this chart, then that candle will close off, and it's completely independent of time. It has no relationship to time whatsoever, because those 34 ticks may come through in a nanosecond or a millisecond or a microsecond or a second, whatever it may be, or a handful of seconds. And depending on the speed of the market and the momentum in the market, that is what you will see on both on a tick chart and also on a Renko chart. It is that raw momentum. If the market really does speed up and gather some speed, then these bars come out at literally it's like bullets being fired from a gun. They really rattle out fast, and it's just, that is one of the huge advantages of trading on a tick chart or indeed a Renko chart. You see that momentum, you see that physical speeding up and slowing down of the price action as it develops. It's all pretty sluggish at the moment. The tick speedometer gives you a heads up as to whether we're in slow, medium, or fast. In other words, we've got lots of participation, or is the market sluggish? Pretty sluggish at the moment. It's in red here. Got red here. We've got red and punctuated red with a bit of orange coming in here. What we really want to see is green. There's a decent move going on here. Not huge. You've got to remember, this is only a handful of pips. This is what, 91 down to 73. So sorry, to 87. So it's 3 or 4 pips. It looks quite dramatic, but it's not that significant. And it's why, if you're going to trade this, you've got to trade on a tight pair, because you are literally in and out for a few pips here and there, and you're not staying in for longer than probably a minute, couple of minutes at the most. Trend monitor signaling the breakaway, move through this low volume area pretty rapidly. It's what you expect to see. Volume works, let's pull that over a bit. Volume works in exactly the same way from a price basis perspective. In other words, support and resistance. So where you're coming up to high volume regions, you expect the market to congest. Where you're approaching low volume regions, like here, for example, you expect the market to go through there fairly rapidly. Why? Because volume is exactly the same as price. If there's a lot of volume concentrated around certain regions, then it's going to cause the market to pause at the very least. There are two reasons for that. First, because there will be lots of orders, old orders waiting to be closed out at that level. Secondly, which is a more semantic argument, I guess, is that if the market considered an area important in the past, why would it not consider it important in the future? Slightly more semantic, I accept. But in terms of the first argument, that's what you're looking for the whole time, is you're looking at the volume point of control histogram and identifying potential areas where the trade you're thinking of taking could either come to a standstill because you've got high volume, or potentially would be a nice region because you've got low volume, and therefore it's an opportunity where the price will move through pretty swiftly. Yeah. So that's on the tick speedometer, that's on ticks, and I've got the Renkos running over here as well. Not sure whether I've got the I've got the Aussie yen on here. This is on the Renko. This is running 3 Renkos simultaneously. Again, matched to time. I've got 15 second, 30 second, and 1 minute, and these are the Renko equivalents. This is set to 6. This is in pips, so this is 0.6. This is not 6 pips. This is 0.6. This is 0.9 of a pip, and this is 1.4 pips. Basically, the slower the time frame, then the larger will be the brick size, because the Renko optimizer, as indeed will the Tradestation and also on Trading View, they will deliver the optimal brick size. So if I select, I go back and reselect, this might have changed since I was here. Select the 15 second, wait for it to load. Okay, it's changed slightly. It's come up at, no, it's gone back. There we go. We just click on that, and that's now set to the optimal size for this particular pair, the Aussie yen, at this particular point in the trading session. It's telling us that to trade off a 0.6 pip brick size, which is what it's doing. I'll just refresh these. It's on 30 second. That's coming up at settling at 10. So that's basically a pip now. So that's slowed a little bit from where it was, I think. And let's just update this one, put this on 1 minute. That was 1.4 pips. See if that's slowed up a bit. No, it's pretty much the same. So that's 1.4 still. Okay, there we go. That's on 1.4. And you get these really nice trends with the bricks. At the moment, it's in congestion. You can see it's in congestion. You have to go down to the time frame here. And got a really nice little VPA example here. This is what you get really good at when you're trading on fast time frames. Look at this little rally here. What's going on? Volume's falling dramatically. Little rally there. Volume's falling away, and I've got this big spike coming in. But that's what it was. Little rally there. Is it going very far? Short answer, no. Why? Because you've got falling volume and you've got rising price action. That is only going to go one way. That is a sign of weakness. You're looking for it to reverse. It doesn't mean it's going to reverse dramatically and collapse. It just means that when you see that, you can think, and perhaps you're short and you see that piece of price action, that gives you so much confidence, because you think, okay, yes, it's reversing, but I know it's not going to go very far because the volume's falling away. It's just such a confidence builder, and it's one of the huge applications of VPA, which we cover in detail in the education program. Big volume spike, volatility, went into one candle. We got another volatility into the congestion, into the spread of the candle. Tremulous is in bright red. Looking what's going on. Yeah. I'll just pull this one over. This is on, see where this is going. There we are. Pull that over there. This is on 5 New Zealand yen. Be doing pretty much the same thing. Volume's falling away, so expect it to fall. As it goes through there, volume's falling away, so it's creating less of a platform of support. It's likely to get down to this sort of level. Almost certainly, as you can see here, once you get to these extremes, again, you're looking for the opportunity for possible reversal, possibly congestion to build, but certainly something to happen. You can see it up here at the top, exactly the same thing here as well. Yen's starting to rise, so not good for risk, which is why you're starting to see the sell-off here. And you'll see that sell-off across the yen complex. It's interesting though, at the moment the Swiss franc is selling off. We've got dollar buying, yen buying, which is pretty much what we expect to see. At the moment the Swiss franc is selling off. We'll see but you know, I can't stress too strongly what's going on globally in terms of if there's any sign that that conflict is going to develop into something you know, greater, then that is going to spook the markets big time. So just keep an eye on the news feeds. A little bit of buying coming in under that candle. You know, we had a continuation, but look at the volume falling away under this move. It's falling away, falling away. Last candle there, fine. Then we get some buying coming under this candle. We got a bit of a rally. You know, what does it look like? Not particularly strong. Volume's fallen away again. You know, it's not. These are just little sort of punctuated rallies in the downtrend at the moment on that particular time frame. And you get that reflected over here on the Renkos with these really nice moves. The trend dot's up above. They've gone to the top, changed red. The trend monitor here is still bright red, red on here, transitioning through into red on that time frame as well. Right, we've run a little bit over time. Apologies for that. Sorry, I have my chat box closed all the time. Just pick up any questions in there. Is it possible to look at actual cash currency on Tradestation? Not worth looking at one because there's no volume and information. Cash currency. I'm not quite sure what you mean, Ezzy, in terms of cash currency. Don't understand the question. I'm sorry. If the chart hasn't got volume, then it doesn't have volume. Some charts don't have volume. It's just you have to accept that fact. It's just you know, nature of the business. Right. I'm just going to close that off there. Quick wrap up, just show you where all the bits and pieces are. This is the education program, which you'll find over at Quantum Trading Education. It is called the Complete Forex Trading Program because it is just that, and it's comprehensive, doesn't really do it justice. You've got all these modules: psychology, fundamental, relational, technical, deep dive into VPA as you would expect, the mechanics of trading module, thousands of VPA chart examples, webinars, how to use the indicators, pulling it all together, topic webinars, webinar library and resources. It's a massive program. It will take you weeks, if not months, to get through the whole thing. We make no apology for that because it covers everything that we believe you need to know in order to trade this market with confidence. And what we've done subsequently is we have bolted on the funded Forex program, which is an option. You don't have to take it up. But we bolted it in purely because we wanted to give our students the opportunity to trade our money, basically, to have an upgrade path, to put that knowledge to use, where basically you leverage the knowledge and you trade our money. Starts at 5, 10 or 15,000. We then, once you've been through an evaluation stage at that level, you then have the option to multiply that by 4. So if you start at the 15,000 level, we give you 60,000 to trade, and thereafter it doubles right the way up to 2 million. So you go from 60 to 120 to 240, and so on up to the 2 million level. You earn as you go. We give you 35% kickback profit on the evaluation stage. We up that to 50% once you go into the higher levels, and you earn that on a monthly basis. And up at the 2 million level, you earn at 60% kickback in terms of profit. And as I say, it's a no risk. You're not trading your money, you're trading our money. And as you would expect, yes, there are risk and money management rules, as you would expect. It's all explained there, and you'll find the link. There we go. That's the link that takes you over to that particular page. You can't buy it outside of the program. It's only available to our students, but you can certainly find out all the details there about the program itself. This is where you'll find all the indicators: MT45, NinjaTrader 7/8, TradingView, and TradeStation. NinjaTrader 7/8 is one license, so you choose whether you want to run on 7 or 8. TradeStation, there are 2 versions. There's 9.5, which is the one I showed you earlier, which is TradeStation Global, and then there is TradeStation Securities, which runs on version 10 and above. As I said, the TradingView indicators, if you have the full package, you'll be getting those free of charge in the next few days, fingers crossed. And if you haven't invested in TradingView, it's probably not a bad time to buy it, because I can assure you the price of the TradingView package will be going up from $677 to $894, because the 2 packages will then be perfectly aligned with all the indicators in both. You can transfer from one platform to another at any time. It's something we offer all our customers. And in addition to that, if you've ever bought anything from us in the past, you've bought an indicator, maybe a couple of indicators, and you want to upgrade to something else, you want to buy a package, or you want to move to the education program, we give you a full credit for them. It's just the way we've worked, and all future indicators we create and develop will be added. If you have a full package with us, you'll get all those indicators free of charge in the future. Again, it's just our way of saying thank you. Finally, just over on Anna's site, that's annacooling.com, this is where you'll find all the books, all the links to all the various sites and pages, and all the analysis we put down here as well. So that's it. We're going to run and have a cup of coffee. Chad, do you ever modify the look back in the indicator or leave it at default? It's entirely up to you. It's obviously we explain how to do it in the support pages. The defaults that we develop for the indicators are what we think are a good middle of the road, if you like, settings for the indicators. But you're more than welcome to change the defaults, and I know a lot of our customers do, and indeed, you know, we encourage it on certain indicators. For example, on things like trend monitor and trend dots, you can adjust those to either increase or decrease congestion phases, you know, to what you're comfortable with. So there's a lot of flexibility in there, but you're more than welcome to change look back periods and see if that works for you in different time horizons. Just be aware, the only thing I would say is that with certain changes in the look back periods, you can add quite a big load to your PC or laptop, whatever it is. So just be aware of that. Again, we have to try and balance look back periods with optimizing computer power and memory and everything else. So, you know, we can't sort of give a look back and say, oh, let's have 1,000 here, because it would just, you know, kill anything. So it is a balance between finding something that is optimized for computer resources and also optimized in terms of trading look back periods. But by all means, feel free to play around with them as you see fit. Hope that answers that one for you, Chad. That's it. We're off for a cup of coffee. Enjoy the rest of the trading day. I think it's the day when you're going to have to be patient and just wait for levels to be breached and wait for trends to start develop to unravel, certainly in terms of currencies at any rate. They are just starting to unravel a little bit, starting to see some pretty strong yen buying on the 5-minute now coming in. So, you know, maybe there's some trades there in terms of Aussie, New Zealand, CAD yen, maybe. We will see. So thanks very much indeed. Enjoy the rest of the trading day and the rest of the trading week. We will be back next week. We may drop another webinar in later during this week. We'll see if we've got time to slot that in as well. But we will see you again soon. Thanks a lot for coming along today. Hope you've enjoyed it. See you soon and bye for now.